This is going to be the ultimate secret for trend trading. Yes, that is correct. We are going to talk about something very, very special today that will help you understand trend trading and pretty much any chart in general on a much, much more professional level. At the same time, this may sound very simplistic in the beginning, but you will see as we get into this that this is going to revolutionize the way you look at charts, the way you understand charts, and how you approach your charts, hopefully. So, as the title already gave away, we are going to look at sideways structures or patterns, whatever you want to call that. This is going to be the premise of it, and this is going to be so important for your overall development as a trader when it comes to technical analysis. Patterns and sideways phases are the connectors between trending phases. Whenever we look at a market, you can see that there are uptrends, that there are downtrends, and between those trending phases, there are sideways markets and sideways phases. We can call them structures, whatever you want to call them, consolidation ranges. It doesn't matter what you call it. Those are the building blocks or the connectors between trends. And if you want to master trend trading, it is so important that you understand how to read those sideways structures and that you understand the role of them, because they have a very important role. Let's go into the basics first and to the general overview, and then we go into the specifics. So you can see the market was in an uptrend, here's a downtrend, and then here when we look out there's another uptrend. And this is generally how the market moves, and many traders, they get excited, they want to be trend following traders because that is where they believe the money is made. And this is true to some degree, but many traders approach trend trading in a different way, or in a wrong way, in a way that is not very easy to profit from, because what they are doing is that they are chasing price. They wait for the price or the trend to establish before they get in, and then they're usually too late. This happened to me in the early years of my trading career, and I realized that this is not going to be a very profitable endeavor. So I looked at and I started looking at charts very differently, and I noticed that there are those certain patterns, sideways phases, that connect really trending phases. So when we look at here the uptrend, you can see the uptrend came to an end with this triple top, and then once this triple top was completed and the market moved away from it, the new downtrend started. And then once this downtrend was over, you can see the market first started making higher lows. We established a horizontal level, and then once the market left this pattern, this structure, a new uptrend was started. This uptrend then came to a pause, and again a sideways range, a sideways market was established. And then once the market was done with this sideways phase, the uptrend resumed. So you can see those patterns are very important to know about, and it's very important to understand the dynamic of the market, because this is really how the market works. It's trend, it's consolidation where the powers between the buyers and the sellers shift. And then it's a new trend, and then again the powers between the buyers and the bears and the sellers shift during those sideways phases, and then a new trend starts. And you will be able to see that across many markets. And we need to get to know those patterns and those sideways phases, because that's really where the pros and the amateurs they differ, or they are separated. The amateurs, they try either to chase trends when they're already going on and they get in too late, or they try to get involved within those patterns. But those are very bad ideas. What really is, and where really the big money is made and where you can get the best reward to risk ratio and the highest probability trade, is when you look at patterns and then you look for the exit of those patterns. And when it comes to patterns, we can look at head and shoulders, we can look at cup and handles, at triangles, or just like in this example, triple tops and triple bottoms. And whenever we want to find a pattern, it is very important that we always start with a horizontal level. You can draw patterns using trend lines, obviously, but trend lines are often more subjective, because sometimes you need to cut through the wicks, Many people cut through bodies. It's a little bit more subjective, but when it comes to using horizontal levels, it's much more straightforward. And what you want to do, and this is really simple to find such a pattern, you want to look for an established trend. Then you want to look for when is the trend pausing, and then once the trend is pausing, you are waiting for the market to show you a pattern where you have at least 2 horizontal touch points. That is really the key, and that's the premise of it. We want to only look, at least in the beginning, when you get started with this, and by that I mean for at least the first few months, 6 to 12 months, when you want to familiarize yourself with this market dynamic. Look for the very obvious patterns. Look for the ones where it's not really, or you don't have to doubt, you're not questioning, and you're not pondering over whether this is a good level or not. Those levels, they should really jump at you. Whenever you can really find a market where you have a very obvious horizontal level, that's a good starting point, and that is something that you should follow. And once you have identified such a level, all you need to do is wait for the market to exit it. Of course, there are a few subtle nuances of how the market is exiting it, but when the market is exiting such a pattern, that is usually when you then see the shift between the buyers and the bears. And there are many ways how you could trade those pullbacks or retests or the actual breakout. That is a little bit up to the trader itself or himself, herself, what he feels comfortable with, also how you want to build his trading strategy. But this is the basic premise of what you want to look for. An established trend, then you want to wait for a pattern to emerge where you can easily draw a horizontal level, and then you wait for the exit of the pattern. And then you can do that again. And within trends, not often will you be able to draw a horizontal level. Here you will be able to draw a horizontal level within a trend, but very often at the end of the trend, you will then see the market is slowing down. And once you realize that a market is giving you a horizontal level, that's really when you should start paying attention to it. We can look at, okay, the market is already making higher lows, which is a good bullish sign because the bears are not as strong anymore. The market keeps coming back into the level. We looked at this pattern, the lower bounce, in one of my last videos as well. So another great confluence. And then once the market exits the pattern, a new trend starts. The trend came to an end here temporarily. And again, suddenly you are able to draw another horizontal level. At the lows, you could say, okay, maybe here is some type of, of horizontal level as well. But at no point did the market really break out of the level. And that is another key. Always wait for the market to really clear the level. You want to see that the market moves beyond a horizontal level, whether it's a support or a resistance level. And that is when the continuation or the new trend is then emerging. And this concept of sideways phases or patterns being the connector between trends is very important, and this will help you look at charts and understand patterns in a very different way. And another interesting thing is that you won't always be able to, when you look at this chart, we can even clear it, it doesn't really matter. Let's try to get rid of all this first. And then you try to look for, okay, where are horizontal levels? And this should really stand out. And when we look at it, okay, here, obviously that's the one I drew before. We can see this really lines up immediately. And other than that, maybe here was another level. Here you could say there was another level. Maybe even here there was another pattern. But that's it. You won't often find that the market is giving you horizontal levels. And when the market is showing you a level, look at how you can draw a pattern and how you can analyze the market with this. The uptrend came to an end. We can see that very clearly from making higher highs, the highest high, to now making lower highs. And then the breakout here after the market exits the pattern. Again, this pattern, this sideways phase, is the connector between the uptrend and the downtrend. People always say that the market spends a long time trading sideways and just consolidating, but not many traders really are interested in analyzing those sideways phases. They just think, okay, I need to get into trend trading. I need to look at how to capture trends. But those patterns are at the origin of trends. That's very important. The downtrend then here started after the market exits the pattern, lower lows and lower highs until this point here. And then at one point you are able to draw a pattern. You're also able to draw here a horizontal level to the downside, but the price never really cleared the level. The price was never able to break out. So at no point would you have gotten into a bearish setup. But on the other hand, the market cleared the highs here, exits the pattern, and then traded higher. And again, this pattern was the connector between the uptrend and the downtrend. This pattern is the connector between the downtrend and the uptrend. It's really, really important that you understand that. If you want to learn how to trade trends, don't look at how to chase price during an established trend. Look at really how to pinpoint those turning points and look at the origin of trends. Not always, but often you will find patterns. And if you cannot find a pattern, if you are not able to define a pattern with horizontal levels, then don't trade it. The amateurs always make the mistake that they want to trade all the time. The pros really know when they have an edge, and the pros understand when they don't have an edge. The professional traders have mastered the concept of knowing when not to trade. That's very, very important. So if, for example, here at this, the market was making higher highs, but then at no point were you able to draw a horizontal level, and then you just pass on it. That's not a trading opportunity. There are plenty of Forex pairs, plenty of markets that you could trade. So really be selective. Don't try to trade all the time. Only try when it's really, really obvious. Here again, the market was in an uptrending phase, and then you were able to draw a horizontal level. You are also probably able to draw, a horizontal level here to the downside. But again, the market never, let's zoom in a bit, the market never broke below the downside. So at no point was the market giving you a bearish signal. And even before the breakout here, you could see that the market was moving into the level sooner and sooner. So it was already gravitating towards the highs, something that we talked about in a previous video. And this is also a premise of one of the setups that we trade, or that I trade in my trading strategy. And there's a link to a special deal in the description below, where you can get in it for free, or you can use the code 100 to get $100 off as well. So you can see again, a sideways phase is the connector in this case between the early uptrend and then the continuation. So if you want to learn how to trade trend following, don't look at chasing price, but really look and understand that there are connectors between trending phases. All right, let's maybe take a look at two more examples, and I think then it should be really clear. This is no rocket science, and this is not super complicated. You will be able to apply this right away, but you need to be very, very selective. So let's take a look at this chart. And again, let's take a look at where can we draw horizontal levels. Where does it make sense? So here during the uptrend, you can see the highs are moving higher and higher, and they're almost never really lined up. So we could never draw a level on the downside. On the upside, not really as well. But when you look at here the top, you can see, okay, suddenly, after an established trend, which is also an important feature, you want to look at patterns after established trends because they have a higher chance of reversing. Now you suddenly can draw a level. You have 1 point, 2 points, 3 and 4 touch points. So this is a very good level. And you can see how the market then rolled over. This pattern becomes the connector between the uptrend and the downtrend, and waiting for the breakout would have paid off here a lot. Let's take a look at the final example, the US dollar Norwegian kroner. That's a trade that I am currently in, along with a few of my students as well. You can see there was an uptrend, and then during the uptrend, at one point you will be able to see this really, really obvious support level, very, very obvious. Many touch points. The trend was maturing here. You can see the price was not able to push higher anymore. We even have this spike here, this failed breakout, and then we recently had the breakout here. And this could be, obviously we don't know how this is going to progress, but this now could be the start of a new downtrend, and it looks quite promising so far. And again, this could be the connector between the uptrend. If we zoom out, you can see there was even a longer uptrend, and maybe the downtrend that is now emerging. And obviously this is a very, very basic concept, but I'm pretty sure that you will see the power of it, and it can really help you understand charts in a very different way of really being able to read the buyer and the seller dynamic, really understand the different market phases, put them into context, and then analyze them in a much more professional way.